Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, January the 15th. Mixed and rather quiet trade here overnight as prices are consolidating just below their recent highs stimulated by last Friday's bullish USDA data for both corn and soybeans. Corn and beans right now, they're 2 to 3 cents better. Corn is pushing up against session highs. Wheat is down 1 to 5 cents, led lower by Kansas City futures, while then the soybean products meal is up $2 to $3, while bean oil is 15 to 20 points lower. We do get NOPA crush later this morning, which is expected to show NOPA members processed anywhere between 203 to 205 million bushels, depending on which survey you are looking at. If realized, this would be a record high for any month, and that would be up about 6 to 7% from November levels. With the expectation of record crush, however, oil stocks are expected to rise over 15% from November to about 1.25 billion pounds. This, however, would still be down from the 1.36 from December of a year ago, December of 23. We also await key U.S. inflation data later this morning. Weekly ethanol production at 9:30 this morning from the EIA. Production is expected to hold close to the previous week's production pace of 324 million gallons. I had expected USDA to raise both their soybean crush and corn usage for ethanol production in last Friday's WASDE report. However, with U.S. production well below expectations, for now the USDA opted to make no changes. We have seen a significant drop in ethanol production margins in recent weeks, and we'll need to see a pretty significant slowdown in production rates to support the current USDA forecast of only 5.5 billion bushels. A few more hot, dry days across central Argentina into southern Brazil before scattered rains start to provide some relief this weekend. More chances for rain and cooler temperatures next week. However, overall coverage of the rainfall is not likely to be very evenly spread out, likely to be quite erratic. In fact, we would expect crop update from the Buenos Aires Grain Exchange for the Argentine crops after tomorrow's close. Conditions across central and northern growing regions of Brazil remain mostly favorable, with record or near record yields expected. However, drier conditions will be needed the second half of January in order to allow soybean harvest and their second corn crop plantings to proceed without further delay. It was an inside trade for March corn overnight. The recent high for the spot contract did bump up against its 100-week moving average near the 480 level. This is a level we have not been above now for about a year and a half. The old high of 460 should now be some pretty good underlying support below the market, as U.S. demand is expected to remain strong through the spring months. The recent buildup of speculative longs in the marketplace, however, may limit the upside potential, particularly if we approach that $5 level. March beans did reject trade over the November high of 10.55 yesterday. Despite the pullback, we do sit here about $1 off the lows from December, supported by the much tighter than expected U.S. balance sheet and production uncertainties in Argentina. The upside would appear limited, however, with a record Brazilian harvest looming and as their basis levels continue to weaken. We expect Friday's CFTC report to show that speculative traders have flipped their bean position around now to long for the first time since December of 23. Oil is consolidating just near the 46-cent level, while March meal is approaching its 100-day moving average resistance near 311. And wheat just continues to be a follower here, going nowhere. We continue to look for some sort of spark to ignite a short covering rally, just continues to lack. Cool, dry conditions over the southern plains, however. Thanks for listening, everyone. Have a great day.